Hey CFMA, this is Dan Kraft, shareholder at VonLehman Company. What is lookback interest and how is it calculated? So what is lookback interest under the percentage of completion method for long-term contracts? Well, remember that percentage of completion is basically an estimate of the progression of the contract up until the point that it's actually completed. What lookback interest addresses is that those estimates, they may cause over or under payments depending on how well or how poorly you estimated your cost to complete. The lookback method basically compensates either the IRS or the taxpayer for that over or under payment of tax until that contract is finally complete. But who qualifies and who has to compute lookback interest? Well, for starters, it doesn't apply to any home construction contracts. So if you're a home builder, you don't have to worry about it. If your contracts are completed within 2 years and you're defined as a small contractor, you don't have to worry about it either. Also, if you're a small contractor, the gross contract price is under $1 million or it's less than 1% of the average gross receipts of the prior 3 years, you don't have to compute look-back interest on those contracts. There's also an election out there that you can apply that if the final contract percentage and the estimated percentage is within 10% over the life of that contract, that election can allow you to not apply look-back interest. So it's probably a little easier said than done. So let's look at an example. So on this particular contract, it began in 2021, and the final contract price was $2 million. The cost through the end of 2021 was $1.2 million, and the total final cost at the end of 2022 when the contract completed was $1.5 million. So for illustrative purposes, let's say that the tax profit that we recognized on the return was $350,000. Well, based on the way that the final contract completed, we should have recognized $400,000 of taxable income. So when we do the math, 400,000 less the 350, we get a $50,000 underpayment of tax on this contract as it finalized. When we apply it by the tax rate, we get an amount of tax that we should have paid back in 2021 had we known that the estimates were more accurate. In lieu of going back and filing amended returns, this look-back interest basically makes whole with the IRS the interest on that tax that we underpaid. So based on the fact that the contract started in 2021, we take the applicable federal rate on that amount of tax that we owed, and that's how we calculate the interest and then pay it to the IRS. Certainly, we can also have it the opposite, where we overestimate and then end up having to get a refund back from the IRS on that work. So let's look at the form. And it's a basic form where we fill out our name and information at the top. And as you can see, based on my worksheet before, the taxable income that we recognized on that project is $350,000. Our change on that was $50,000 to get back to what we should have paid on that income had we known the correct estimate amounts. The tax on that particular income is this $148,000. What we actually paid was $129,500 to give us the difference in the tax that we should have paid of $18,500. Based on the rates that we have on that contract for 2021, comes out to $245 that we owe back to the IRS. So I hope this helps you understand and figure out look-back interest. Thank you for taking the time to watch this video.